Welcome everybody. Stangam and John in the house.
Yes,
Daily
sir. Yes,
recap.
sir.
Daily recap. March 8th, 2023.
Another day in the books. Another day in the
Another
books.
day in the books. Today's Wednesday, hump day.
Yeah, Wednesday.
Hump day.
Yep.
I
It
kind of
felt
checked
like
out
that in the market today, guys.
I kind of checked out of the market today.
Yeah,
I
it
kind
felt
of
like that
kind
today.
of kind of went and took me a nap today. It was a good day to do a nap.
Yeah, today was that area that we were talking about yesterday in the recap video. We kind of said this areas. It was interesting, but it literally did what it. I mean, it was doing what it was gonna do.
Yeah, giving them time to get out of their position
Yeah,
or
I think
add whatever they're doing.
Yeah, I think they might be adding for the long run here. As you see, we just consolidated all day, kind
Yeah.
of sort of. We went sideways all Asia. I mean, there was up and down, and it stood in the range. So that was the key. That it stood in the range.
Today
So,
was a scalper's dream come
yeah,
true today for a scalper.
I got tired of scalping. I think I was
I
scalping all the way into the open.
I can't scalp. I think I took one trade, 10
Scalp.
points, and cut her down. That was
I
it.
scalped it a couple of times at the lows, and I just kept buying the lows until London's closed, and then London's closed. I took it to the high, and then at that point, I thought we were close above Asia's range, and that was key. That was literally key. Let's go to the
Yeah.
chart,
I was
Tabs.
a little shocked they didn't go on down there and hit the Asia gap. I thought maybe there at one point when I looked at the phone that looks like they were going to try to hit it.
I
And
think they're just buying time. I don't believe that they're
yeah,
not going to
they're
go.
in no rush. They're in no rush. They
They're
got
not
to
in a rush.
Friday. They got to
And
Friday
also
to
the
hit
fact,
it.
like you got to think, like reports are usually instantly, right? They already set the mood from the first day of the Feds. But you got to take this for consideration that drop was before the reporting anything before anything even started. So
Right.
the fact that we went up to the highs and we came down to fix ourselves on the way down, um, it came to literally, touch all these halfbacks that left alone for 2 days.
Yeah.
So realistically, it did what it was supposed to. Now they're just holding on to it as this meeting occurs with the Feds.
So what do we got tomorrow, news
We
wise?
have Barr again, same
Oh,
thing
we got
again.
somebody talking, and then we
Barr will
got,
be testifying again in front of the Senate.
and then Friday you got non-farm payroll.
Yeah, and they keep on changing it up because today was supposed to be less time, but it was more people talking. So they gave them less time, but it was more people talking. And they
So
don't say how many people. When I just saw, oh, they're just giving them 5 minutes this time, they just kept going through people quick. And realistically, they were just talking and there was no response. Really, Powell was just like, yeah, I already heard this. So it's literally the market doesn't want to hear. I'll tell you like this: the market doesn't want to hear that we're going to cut the rates. Like, not that they're going to cut the rates, but they're going to stop. If they stop interest rates from going up, the market will go up. I mean, the market will come down. The fact that they're actually looking to keep on increasing interest rates will create the only way they can make money off the market is to send it up. Because if the market goes down, how it's could only go so down.
right,
Nobody's
right.
going to buy the lows like if it did that. So they want people to participate in it, and for them to get money off of it, they needed it to go up so
Yep.
they could sell it down. And
It
that's
goes back to our thesis. The market is always a buy if you know
yeah.
what time to buy it.
Well,
Right.
this is the thing that nobody's really like. There's a lot of people that don't really manage their 401ks. There's people that do, but the majority of people do not manage their 401ks. In order for the market makers and the market itself and bankers to make money, they have to have those people still participating. Now, if you cause a panic and the market starts tanking, then you have those people that are going to be like, wait a minute,
Yeah, I need to get my money out. I'm losing.
yeah, and that's going to cause a panic that they don't want. So as long as the market goes up, they could consistently make money. But the time that like most people say that when we're in a recession, it when they say we're in a recession, which they say we're not right now, um, it's already too late. We're actually recovering. So right now we're not even in a recession. So why would the market even go down? And the reason those two factors don't take effect is because um, everything's going to occur after the Fed stopped raising interest rates, not
Yep.
during the time that they're raising interest rates.
Right. Right.
So the shock of the interest rate did take effect from 4,800, and we went down, right? But the real scenario is really when they stop raising interest rates, because then it's going to be that they can't raise anymore to control inflation.
Right.
And the fact that they have to, inflation has to fix itself when they stop raising them, and that's going to be the long haul, because it's going to meet in the middle. Inflation is going to come down, interest rates going to go up, and the only way to beat inflation is if those two meet.
Right.
Interest rate has to go higher than inflation, and we're not there yet. So
Nope.
once we pass that threshold, then we'll have, the Fed saying, okay, we're not going to raise any more interest rate, and then that's literally the shock of the market, where
Yep.
they're allowed to release the market, because once you release it, then that's when the recession, when the recession will actually take place. But like I said, when they already call recession, we're already recovering.
Yeah.
But
The pain's coming. It's
yeah, the
coming.
pain's coming. It's just
It
not
ain't
coming
here
right now.
yet. Yeah.
So the fact when Powell said today, and I said in the chat, when Powell said, "Oh yeah, we're gonna continue to raise interest rates," that's why it reacted the way it did to go up to the highs a little bit. But they're not ready to let it go yet, because I think the fact that we have another speaker tomorrow.
Right.
So why let it move when there's news still coming? So if news is coming still tomorrow, they're doing what they're supposed to do. They're staying at the lows. The only reason we drop is because we had a fixed price. Now, don't get me wrong, we are gonna go back up to the highs, to that 50. But when we get to that 50, it's not gonna be a buy up there. It's actually gonna be a sell. And then it has got to come back down and recover from there.
Well, let's get in the charts. Let's show them what we're talking about.
Yes, let's go. So it was a tricky day, but I mean, it was a day. I think these 2 days are days to trade it with minis. If you get a little burnt, you learn your lesson, but you could improve on your entries and see what the market really does. We still have the yearly chart. Let's go to it. We still have the same scenario. We have here the same area we're at. And this is the thing with this chart. You got to think long-term investors. Look, we went up, we dipped under 50%. We're above 50%. So at this 50% or below, what are they thinking? The same scenario we do with the 6 a.m. range, 6 London 6 a.m. Setup. This is literally almost the same thing, but on a bigger scale. Understand that this is a bigger scale, right?
Yes.
And we still haven't, we went down, we went low, we made a new low, but we're holding the previous lows here. See, like these lows, we're trying to hold on to them right here. So this was the official low as price. Look where we're at.
Yep.
We're still holding here. So they're buying underneath here. Why? Because we made a low, lower low, and this could be
The
a
higher
higher low,
low. Yes.
which will in doubt create that move up. Now we are going with time. Time for us was down here to buy. We knew it was a buy down here, and we knew it was going to go up here. It did it very fast, and then it came that we knew it was going to come down and fix itself. It went all the way down to lows into these Fed meetings, and now it's trying to consolidate here at these lows. Now, take it for where it is. We did have a target, and it did hit at 71, 71.50. I guess this price right here. So, it's still. It took out the high and came down and hit this halfback right here.
Yeah, it swept that low there.
Yeah, but this is a halfback as well. And this is a 4-hour halfback. So this is a halfback where we took off. So initially,
and this is Asia's gap.
Yeah, so yeah, and so if you think about it, yeah, there's Asia's gap too. But if you think about it on a chart, right? Look how all the halfbacks get hit on the way down, on the way up, right?
Yep.
Everything gets hit. Look, even this halfback gets held. And now look how we came down. We're literally coming down into this candle, hitting that halfback. So that road down there is partly closed right now.
Yep.
So it's kind of hard to say on a yearly that you're looking at it and you're like, yo, this is, it's doing what it should be doing, actually. So the fact that it came down here, and look at that power into the end. So let's go into a smaller time frame and let's look at this.
Yeah, nice little candle at the end of the day today with
power.
Just about did the whole range.
Yeah,
one candle.
Yep. And we're green on the day at the end of the day.
So, yeah.
So this
got to make everybody feel good.
the Asia range, as you saw, we were the only candle I sold was right here at the open. It sold down and went all the way down, and 2100. That's another thing that we got to keep an eye on. That they sold it in Asia, period.
Yep.
But after we hit the lows of 151, we did not break down. So this was not a continuation move. So as soon as 2300 hits and we're going up, you better believe we're going to the high side. And literally we hit the high side. 1 a.m. we hit the high side. London's open. We went right back up there. So
that half back
actually just kept going and it kept holding. So
then
what I was
come
saying
to
in
the
the
other
chat
side.
that even though this was doing this, the only sells that were in the market from that period were literally around here because we started failing high, low, halfback, right? And we kept failing it. But here, once we started going above, this was not looking like a sell right here. This was looking like a potential go up. When it trended down here into the, this was early and it looks similar to what it was doing yesterday. It looks similar, right? But yesterday we did this into the open. So to me, when it came up here, I was like, we're literally back at halfback. So if this is high, this is low, and this is halfback, when we hold, we could have a potential move up.
Right.
Into the report. Look, this is when the report started. We didn't break down like yesterday. This candle yesterday was humongous. On the way down, we hit all the targets, and I mean, it looked like it was doing
Well, I'm
it.
going to tell you why I wasn't looking for that though, because your macro over here, this is your high, this is your low, this is
And
half
halfback
back,
could be right here.
and we couldn't even get there. Couldn't get there. Couldn't get there in London. Couldn't get there in pre-market. Couldn't get there in New York.
Yeah, and
So that was for me. This is where I took my play. I took my 10 points on this
you
move
show
down.
that
So
in London's close, after London's close, this was a sell. And the reason it was a sell is because we went to downside, and after 1 o'clock, this became a real sell right here. Once you saw this at 1 o'clock, like you're literally saying, "Hey, look, let's ride it down, boom," and we hit target. Like I said in the chat, we had this as one target, which was that halfback that we just showed you on the yearly, and then we had the low down here and Asia, which was 32, and this area down here. So realistically, we still had target down here at 60, 61, let's say 25. Because when it displays this, like it says 61.15, I always put the number that's going to hit, not this number. So 61.25 will hit on a dime, but this number will not. So that's why you got to be a little bit above this, even though it's London's close range.
Yep.
And like I said, look, we held this all night, and then we held it here. So I went long here, and I took it to the high, and I said, well, that's into later. We'll look at it later. I said, let's look at London's close range. It hit all the high sides on every play here.
Range was tight though.
Yeah, it was really tight range. All the high sides, the low side got hit here, high side got hit. London's close, high side got hit, and then it sold off into
another clue. Yep.
Yeah, it didn't hit the target all the way down here on London's close range. I mean, 1300 candle. It was about a hit, and it reversed. But like I said, this little area is tricky, and the fact that we hit the last halfback on a daily, this is what happened after we hit that. So what do we have? We have a high, low, and this literally was halfback right here, and it's right back.
And it flipped because you had high, low, halfback, sweep, and then now you got low, high, halfback. It swept the other way. So that's the turn. This is our turn right here when we talk about turn.
And realistically, like if you look at these candles, if you were showing in the high, that's all you had. Like I said, sell high, buy low. That's all it kept doing. But if you look at this, you can't really, this high, this low, this was halfback, this candle right here told
that's hard, right?
So if you were selling in here, you were pretty good right here after London's close, because I said, hey, listen, we'll find out if we're above. Like what you want to see is into London's close. You want to see his close candle, right? But look, it hit the highs already. So if we were going into 1300, right, into the 1 a.m. candle, right, price should have been up here, above. Price should have been above.
You mean the 1 p.m. candle?
Yeah, the 1 p.m. candle, Eastern. Price should have been above Asia's range high, 96, and we said it. Dob said in the chat, we get above 96 in the next time frame, which this was showing bullish. This candle should have been up here and we should have been trading like this.
Yep. And then
But
took
we
off.
did not have that scenario. So the fact that we go into 1 a.m., 1 p.m., and we're trading right here, this is telling you something. And you could have got that play down this way because in the range, you got this as a target. And nothing here. If you see, look, halfback failed, right? Even though we didn't test this halfback, right? We did test this halfback. We're below Stingham line.
Yep.
Now, when we dip underneath here, then we're selling off into that. Because what happens is that, and I say it all every day, I think, at the open, all this right here is what?
Noise.
And it's the daily
options.
The daily options that are killing the market like this.
Yep. Look
now,
all them
now realistically, the play could have been like this, very simple, but daily options are making this very difficult at the open, especially when it's something with the Feds. Daily options should have done this. We should that wick should have gone down there, and then we could have possibly came up here, done this, and then took off. And we're up here by the end of the day. But daily options, they're not ruining the market. The market is
they're
making
killing
money.
time. They're killing time.
They're making money off of them. If you look at that move at the end of the day, when was that move? After they can't get into any more plays. So, you're looking at 11 o'clock. At London's close to have less options in there. So it goes in the direction it did. Look.
Yeah, you can tell it's a lot cleaner.
Yeah, after options are done, this
right here,
garbage right here, where you have so many markets, two of the biggest markets open, and you have this option thing that they're not letting price go up or down. After London's closed, you have less options. And look what they did. So they brought it down. And you have less options. So boom, they were able to hit target.
And then they got everybody offside. Then what do they do?
Yep. So then when people started getting heavy down here, and remember on the yearly we just showed you, this was a crucial spot. We could continue to go down there, but we did not go down there. And that's why I said, well, we have targets on the upside and the downside. Depends what we're doing. But with time here, look what time it is. We close our range at 3. We close our range at 3 at 3 p.m. Eastern. So when price went back up and we're holding under here and you have this big move, this is very dangerous because it's telling me that what did they do? Everybody went heavy with puts and calls for a downside. And the market said, well, we're not paying those, and the fact that we came down here is that people start chasing this, thinking like it's going to keep on tanking. But realistically, if you go back to the yearly, with time, we're still above that high. We're still above this low. And this is a monthly low. Remember, this is the previous month halfback, which was the low of the month because we never made this low. We never went lower than this. So this was actually the low of the month. So this is a low.
Yep, swept the low.
Yeah, and we swept the low on this side. This low, we swept it and reclaimed it. Look how sharp that price is right there. And then now we're back up here and we're not hitting that low anymore. We could possibly go down here and get that Asia. But before we do that, they want
to get above here now.
Yeah.
Daily halfback.
And it's this low right here that's concerning. Like right here, this. Oh boy. Once we get above this low right here, it's gonna, if we get above this low, we're gonna see a big move up. We didn't even test any of those levels today to the top side. So possibly we still consolidate into tomorrow's meeting, or we could literally drop from where we're at and go down to this low right here, which will literally close out the Asia gap. And then we ramp up into Friday once all these all these meetings are done. So it's not the best time to trade it, but there are trades there. But on these days, be cautious. Go with the minis,
micros, MES.
Yeah. These days right here are minis because look at all this congestion that's
MNQ. If you just gotta trade NQ, MNQ.
Yeah, like a day like today, it's very congested. But as it looks right now, the only thing that could possibly bring this back down is a gap down. And if we gap down, we're literally coming down here. But right now, it's looking like we might be going a little bit to the high side, at least to that price right here. And I'll show you where we'll possibly go right here because of where we closed today. And that's very important where we closed today. So if you take this high and this low, right there, that is very important. I had this on the chart last night as well. The fact that we have not closed below that low right there, and we hit half back right there, this is a lot of things going on right here. So if we're below this low, yeah, we continue down. But the fact that we're bouncing off of it twice, that's a double bottom. And the fact that let me get rid of these prices because I just put this on the chart just so you could see something. But look where we're at. So look where we're at right here.
You're above halfback.
Yeah, and we're above halfback. Whereas this price, we were losing it. We came down, we came back up, right? Came down here. We didn't quite hit halfback of that candle, right? And look at the move we made.
That was a massive move right there.
So what did we do? We came up here. We literally hit, but it was because we bounced off this low. But look, we came up here. We hit the low. Guess where we came back down to?
More orders down here to hit that.
And then look what we did today.
Yep.
We literally came back down to that halfback. We
got
left
orders
behind.
Yep.
So we went to pick up orders, and as soon as it hit those orders, guess what it did? It bounced up. So that's very crucial. Think about that. Now, we're not going to go off the daily. The only thing that we did see in the daily, which if you set up, you could literally see this. Let's just do this London open range. So there's plays for every type of scenario. The fact that we weren't getting above or below the range, we could literally do London's open range right here, which we tell people about. And I'm going to show you something. And I put up a chart about it, what it was doing. And the reason I didn't want to trade is because of those wicks. And I said, oh, it's probably going to continue to do this. Just take the high. Well, let's take this high at 5 a.m. right there. We're right there. And then this is our 7 a.m. candle, kind of right here. It should be on 30 minutes. And then let's take these. Let's just do half back low. See where it puts us. So, the fact that we kept being bought up like that is a problem. I mean, even let's just do the whole range, actually. Let's do a whole box on 30 minutes so we can see it better. Into 7 o'clock. So let's take our 3, this price right here, take it all the way up to, that's still the high right here. All right, right here. This is the low. This is the high, right? Then I hit the low, yeah. And it literally hit the downside of that side. So we swept the downside. And we never went up to sweep the high side. The high side would have put us right here at London's close range. And they just kept buying the downside of this range. So even when it wicked down here, it literally came down and came back up.
Orders.
Yeah.
Orders.
And I mean, right here, we're at 7. We're at the low side, and they kept buying it. So look, went up to the high side, and then it sold off from the high side all the way down to the low side.
Yeah, they wanted some more. Like you can tell by the candle right there.
Yeah. And then the fact that we came down and swept the low again, look, just like this candle, we didn't hit the low, swept it, hit what we needed to hit, came back up, and now it's looking very dangerous to go up to the high
Now
side.
look, they're above this, above the body.
And then
They're
realistically, if we go back to the yearly, this is the price right here. So, I mean, look how that matches up. Swept down. Where's it going? Let's go to yearly.
To go to the high side, which might be half back on
It's
that
right
big
here.
candle.
Now we're way above this halfback. Look. So we're above the halfback.
Half back of this candle.
Yeah, and that matches up with the halfback of that candle as well. So if
Pretty close. It's close.
Yeah, that's the area, like right there.
Yeah, it's close.
Because it'll go up here. So this is the area of that we're gonna see a pullback in. because of the scenario of what it's doing. That little area matches up with all the sweep up and down. Swept down, came back up. And they're just picking up orders down there. They're not necessarily, oh, we're gonna sell this. They're just picking up
Oh
orders.
no, we never say the market's in a sell-off.
No, they're just trying to find places to buy.
It's either profit taken or pullback. That's it.
But right there, look how that matches up right there. That's that perfect area. So if they swept this downside, we ain't go down. Can we possibly go up? We could go right up into this area. And look, we're back in London's close range to the high side.
Yeah,
it's dangerous. We still aren't at a 50% from the high to low. So you took that high and that low. Look where it matches up to.
mm-hmm.
Look where we're hitting to.
Halfback.
Right at those wicks. So, I mean, it's the day that it was doing it. Like the day it was doing it. And realistically, on a chart, like we said, it bounced off that halfback from the monthly, so it's kind of still in a buy mode. Will it tank? Nah, that's why
No.
with the Feds talking, it did interrupt what it's doing. But remember, all that interruption started up here. Up here is where
there's that 50 we was talking about.
Yeah, up here is where all that started, and we need to return back there. And look how this looks now. If you put London's close range, and we're not going to the low side, look where we could possibly go.
Yeah, we're already back inside the range, so it should not go back out.
Nah, so if we get back to 405 and we're trading tomorrow above 405 and we're dangling between 405 and 427. You better believe by Friday we're probably going to go for 40 49. And remember,
you know the progression 96, 24, and 55. So
this is Monday. This is going into Monday. We hit where we had to and we came all the way back down. Remember, this was a change of direction from the lows. So in order for this even to come down, we have to test this high. So everything is key right here. Like here, look, we hit it and we went down. Why didn't we continue to go down? That's 50%. Why? Because they sell it like this and the market has to fix itself. So when they sold it like this, there's something wrong with that. So the possibility of us doing this kind of move is more likely that we're going to go fix ourselves, right? Everybody's going to get happy. The market's taking off, right? They're going to sell it right back down. They're going to sell it right back down into that, around that 50% down here, or into that area where that 50% is at. So you have to be careful with what they're doing because they're displaying something and they're going to do the opposite. So when it gets up here, everybody's going to be, long. And then it's going to pull back because they sell the highs and buy the lows. Down here at the lows, they didn't want to make it too easy. But the fact that we did this at the end of the day and closing, remember, today the market is actually green. At the end of the day, this became green.
Yep.
So that is also another key factor that we hit a crucial area that we should have hit here. And if maybe would have hit here, right, into London's close, this thing would have took off. At least come above this price.
Yeah, they double dipping. We know what they're doing.
So they didn't want to show it that easy until Powell stop talking. So it's literally possibly going to do this scenario. Anyway, Dobbs, that's it for me. It was a short day. I didn't really like what the market was doing. Sometimes you got to do it. You got to just put it. You got to say, hey, you know what? It's not necessarily breaking out this range. It could break up. It could break down. Let me wait for the play to develop. The play developed to a short side at the end of the day. Did it continue? Absolutely not. You could have shorted. It took a little scratch. You could have shorted on the highs and got the lows, or bought the lows and sold the highs. But it wasn't an easy day trade, and you're gonna have that. We're gonna have that one day or another. But you have to recognize it or understand that with these kind of prolonged meetings, it's gonna happen. And once you understand that, you might want to stay away from those days so your account doesn't get, so you don't overtrade. You could have traded a mini, but sometimes, it takes a lot of discipline to be like, oh, you know what? I'm gonna walk away from it. And once you get there, you're gonna know that you're somewhere where you want to be.
Yep.
Because there's days to trade it and there's days not to do it, because this day will mess your confidence up in other days. And you'll be like, oh no, it's gonna do this again, and then it just rips, and then you're like, oh boy, now I only took 2-3 points, and I had 7 to 10 points to get, you know.
Yep.
But anyway, that's it, Dobbs, for me. I will catch you tomorrow on the AM. We'll do it again. We'll listen to another Fed thing.
All righty. Y'all know the drill. The risk and disclosures, knowing where price is headed is our edge. We know how the market moves. Remember, trading is very risky, and most day traders lose their money. And in that, you don't have anything else to lose. Let's go.
Cause so many time passed by. Don't know why I'm losing my mind. Ego was so strong inside. At this point I just lived a lie. I just lived a lie. I wish I could tell you why. I wish I could feel you again, but I know it's too late, and I know you're away. There's a chance to apologize. No. It's a goodbye, just a goodbye. Forever and ever, you'll never come back. Just a goodbye, forever goodbye. I sit in my ride, thinking about you. Drive through the night, I got nothing to lose. Strobe city lights, they can tell me the truth. Tell me what I should do, I got nothing to lose. I got nothing to lose, thinking about you. Drive through the night, I got nothing to lose. Strobe city lights, they can tell me the truth. Tell me what I should do, I got nothing to lose. I sit in my so many time passed by. I saw you last time. This is my last ride. I wish we're gonna see us on the other side.